There is no floor to catch this right now. So in the short term, all right, welcome to Talking Investing. I am Tom, and as always, this is not financial advice. Today, I want to do a video on something I have never done a video on before, and that is The Honest Company. They have been on my watch list for quite some time. They reported earnings yesterday, so I want to go through what happened and what we think we may be able to expect going forward. So if you're new to the channel, please subscribe and hit the notification bell. Also, please smash the like button and feel free to drop a comment below. You will also see in our pinned comment a link to our free Discord. Okay, let's talk about The Honest Company. So first, let's take a look at where they're at. They're trading right now, and today is Friday, March 25th. So they reported earnings after hours yesterday, and you can see the market did not like their earnings report. They're fluctuating. They're down around 30%, and they have taken out their all-time low today. So they're about 4 cents off of it because they were down a little bit more a few minutes ago, but today is their new all-time low. We'll take a look at that when we take a look at the chart. Let's go through the actual earnings report and see what happened. The Honest Company reports fourth quarter and full year 2021 financial results. You can see this was put out March 24th, 2022, so this was put out after the market closed yesterday. Combined core category revenue of diapers and wipes and skin and personal care increased 19% compared to the fourth quarter of 2020. Full year 2021 core category growth increased 13% compared to 2020, and the company provides full year 2022 outlook and long-term strategic plan. Now, it's this 2022 outlook actually where the problem is, because their earnings were pretty much right on. Okay, so this is a breakdown of their revenue for the 3 months ended December 31st versus 2020 fourth quarter and the 2019 fourth quarter. And they've done this for a reason, because there was an anomaly in 2020. So they're trying to compare apples to apples here. So subtotal core product categories. These are their core products. This is what the future of their business is based on. Below the line, you're going to see household and wellness. And really what that represented was antibacterial and masks, which obviously thrived in 2020 due to obvious reasons. So you'll see in 2019, that was 2.6 million. In 2020, it ballooned to 14 million. And then in 2021, it dropped back down to about 4.4 million. So this was not necessarily ever intended to be a significant part of their business, but world events dictated that sales blew up in that category in 2020. So the comps were a little bit off. So it's more important to look at these core business comps. And you can see they had a very nice year in their core business. They went from $63 million to $75 million. So that was very nice growth. I don't think anybody was necessarily disappointed with the fourth quarter results or the 2021 results. This is Honest's investor presentation, and you can see this was updated for March of 2022, which is this month. I'm going to focus on one page. I went to page 12. This, I believe, is why the stock is crashing. In their investor report, you can see they have a chart here. Established core categories continue to see double-digit top-line growth. Okay, this is back to the press release for their fourth quarter earnings, full year earnings, and their 2022 forecast. So I'm going to skip down to full year 2022 outlook. Full year 2022 revenue is expected to be approximately flat compared to 2021. So I think that took everybody quite a bit by surprise, because that was not the expectation at all. This was a company that was expected to be in the 10 to 15% growth range, closer to 15% according to analysts. They say the first quarter revenue is expected to decline 15% from the first quarter of 2021. Now, they're not guessing at that. It's March 25th. The first quarter is 1 week from over. So they're telling you this already happened. They had a decline in revenue in the first quarter of 2022. Now they're saying subsequent 3 quarters are expected to see mid-single-digit growth compared to 2021. So this is very different than their investor package, which was updated this March, that said double-digit growth. And they go on to try to say what went wrong in the first quarter. Our first quarter outlook reflects a comparison against elevated sales related to our sanitizing and disinfecting products in the first quarter of 2021. So that makes some sense. And the company's liquidation of legacy beauty inventory ahead of last year's beauty restage. They just got through giving us an investor package that said they've been in the double digits. They expect to continue to be in the double digits, but in reality, they're lowering expectations. First quarter is actually going to be lower than last year, and then from that lower number, they're expecting single-digit growth for the rest of the year. So that's a dramatic change in their 2022 outlook, and this is a small cap, high growth company. They seem to have a lot of innovation. They have a broad scale of products. However, for whatever reason, their growth has come to a screeching halt here in the first quarter of 2021. They go on to say they expect gross margin to be roughly flat compared to full year 2021, so I don't think that's a problem. We all know there's a lot of supply chain issues and other things raising prices, so for their gross margin to remain flat is actually probably a good thing. They're not backing off of their research and development for product development. They're not backing off of their marketing. We're just going to have to see how this plays out. They finish this off by saying, despite headwinds in 2022, we continue to be optimistic about our long-term growth perspectives based on our go-to-market strategy focusing on marketing, product innovation, and distribution expansion. So going out into years past 2022, in the big picture, they are saying they're still very confident. They're sticking to the program. Nobody there is panicking. However, the market is panicking. So I want to take a look at the chart. Okay, this is the honest chart on the 1 hour time frame. So each one of these candles represents 1 hour. You'll see a purple line here at $5.01. That purple line was their all-time low previous to today. And they got very close to that back on March 8th. And then they hit $5.01 on March 14th. You can see they had a run up since then. So they were in the $6 range going into earnings. Unfortunately, these earnings were received very poorly. They opened up just under their all-time low. And as I was watching, I felt it was important. If they could have maintained this all-time low, they were within a few pennies of it at the open. If they could have created this as a floor, as a bottom, then this would have created a very, very solid line of support. But they did not do that. They have cascaded straight down from there pretty much ever since. So they're now at $4.30. So they're just under 15% below their all-time low. And remember, they were way above that yesterday at the close of market. So they're down 29% right now, and it's been fluctuating between 28 and 30% all day so far today. So at the moment on the 1 hour time frame, we're a little bit green on this new candle. We're just a few minutes in, so perhaps they are bottoming out for the day somewhere in the 28 to 30% range down. My concern for this company is they just took out their all-time low. And not by a little bit. They just crashed below their all-time low. There are no more lines of support left for this company to stop at. They seem to be in a bit of a free fall. So I think the next 2 or 3 days will be key. Can they establish some support here down in this $4.30 range? Because right now they are well below their all-time low. So here they are on the daily time frame. You can see from a local high in September, they were around $11 or $12. They're now around $4. So they are down dramatically from there, but this is not their 52-week high or all-time high. Back when they went public, they actually opened at around 23, just under $24. They quickly did pull back to around just under $20, but still, they've gone from a $20 stock down to an $11 stock and now down to a $4 stock. So there's no telling where the bottom is on this. We have seen several stocks. I have had several stocks on my watch list go down more than 90%. So they are not there yet. They're just at about 80% right now, which obviously is a significant downturn. My fear is in this market, things have done worse than that, and there is no floor to catch this right now. So in the short term, I am worried as to where this is going to bottom out. This could be it right here for all I know. So this has been on my watch list for a long time, and this might be the greatest buying opportunity ever. But because they have so badly taken out their all-time low, I'm worried that I don't see any support below this. So I thought about this long and hard. I'm on the fence. I'm not going to jump into this right here. I may regret that later. And again, this is not financial advice. please do your own due diligence. This could be the greatest buying opportunity of a lifetime for all I know. But because of the reason that there's no line of support in sight, I'm a little bit afraid. I'm risk averse in that way. So obviously, if they can get their act back together over the long term, this is a potential massive growth company. And I may watch the next quarter or two and see how they do. And I may not get them at their all-time low, but I will still keep them on my watch list. This is an interesting company, but they are having a very, very bad day. So that's my update on Honest. Thanks so much for watching, and we will see you in the next video.